Welcome to the Profix Coffee Talk series focused on capital expenditure planning. My name is Nicole Deisman and I'm a product marketing manager at Profix. And today I'm co-presenting with my colleague Mark Bahar, Profix's customer stories manager. Over the next 10 minutes, we certainly hope that you enjoy the Profix Coffee Talk. The amount of capital expenditure a company is likely to have depends on the industry it occupies. Some of the most capital intensive industries have the highest levels of capital expenditures, including oil exploration and production, telecom, manufacturing, and utilities. But regardless of the industry you operate in and the levels of capital expenditures, it is very important for companies to be able to separate out capital expenditures so it is visible, transparent, and open for review. The amount of risk and money that can be tied up in acquiring new plant and equipment and technology can be quite significant, and these costs cannot be buried. Profix Capital Expenditure Planning offers a unique experience for organizations because of the fully integrated planning that allows you to understand how changes to CapEx management directly alters the income statement, the balance sheet, and the cash flow statement. You can compare planned capital expenditures to actuals at the detailed level, drilling across into external ERP or general ledger source systems. Stakeholders, business users, can investigate their costs and budget justifications with ease. There's also greater accuracy and accountability because operational department managers are involved. Profix eliminates manual steps and organizations benefit from the automation of capital expenditure calculations. You can watch and see in real time the effect of changes to additions, depreciation rates, repairs and maintenance on the bottom line, and review historical CapEx spending patterns to outline your projections. Profix also offers unique business modeling through creating automatic depreciation calculations such as straight line, double declining balance, and sum of years, and using key performance indicators, KPIs, to evaluate capital expenditure assumptions. And it can become your springboard into deeper data analysis. Let's take a look at an example in Profix. Thorough capital expenditure plans should function at a consolidated level, being able to review the effect of capital expenditures on income statement, balance sheet, and cash flow statement, but also at a more granular level, tracking information like additions, improvements, asset classes, salvage value, and depreciation rates. Attributes can be created for useful life, asset type, residual value, etc., with calculations automatically running and NBV, net book value. Profix provides the power to manage detailed CapEx plans and forecasts from one solution. In Profix, you can hold your company's department managers accountable for the capital expenditure in their respective areas using Profix workflow. Managers would have assigned CapEx plans where they can add additions and then immediately see the effects on their plans. Profix CapEx planning software integrates detailed capital asset costs into historical financial statements and investigates how capital expenditures impact your company's performance, and with the ability to also compare planned capital expenditures to actuals at the detailed level. Using Profix prevents companies from having to maintain separate applications and opens up processes to both financial and non-financial users from a capital expenditure perspective. I will now hand it over to Mark Bahar, Profix's Customer Stories Manager.
Thank you, Nicole. Folks, by looking at how companies use CPM software to help run their businesses, we speak to the intelligence and the creativity of these finance innovators, and we let people know about the possibilities of what the software can help them to achieve. Our stories focus on how they run their businesses with CPM software as a valuable tool in those efforts. Our customers do interesting things, and they all have one thing in common. They use Profix's software to 1. Automate their financial processes, 2. Make sense of the tidal wave of their data, and 3. Make better business decisions based on their analysis of that data. So let's take a closer look at an amazing customer story involving CapEx planning. In 2009, after years of running a part of Microsoft's very large portfolio, Coldwell banker Richard Ellis, better known as CBRE, took over Microsoft's real estate and facilities management. 900 CBRE employees work on the Microsoft account in 3 groups. They oversee finance, project management, and portfolio management. They also have blue-collar employees, of course, like electricians and plumbers. CBRE partners with Microsoft to manage their real estate investments, essentially handling their real estate decisions in terms of owning versus leasing. This is global, not just in Redmond, Washington. Microsoft has large offices in Brazil, Ireland, India, and Hong Kong. And Microsoft's buildings alone are in 70 or 80 countries. And where there are buildings, CBRE has people working on the Microsoft account. Basically, CapEx planning is the core component of how they run this business. When Microsoft has a new building that they're purchasing, CBRE analyzes the purchase cost and related cost, grouped by WBSs, or work breakdown structure, which is the way levels of detail are broken down in SAP, which is the provider for one of their ERPs. Then CBRE evaluates furniture, cable, AV, and the cafes in their buildings as one example. They forecast and plan out their total spend on a building. They look at levels of renovations tied to a certain budget. They look at total cash flow spend. Then, what are the depreciation results? They look over 5 to 10 years, sometimes out to 20 years, basically to see how this will affect the budgets. With real estate, they're constantly concerned with long-term planning, of course. If CBRE has a single Microsoft building to evaluate, they might isolate it as a single project. If it's a huge building, it might get broken down by multiple projects, broken down by renovations, or broken down over several years. One project last year was a cafe refresh. Some older kitchens were rebuilt into Microsoft cafes throughout their buildings in Puget Sound. This involved, in fact, 20 to 30 new cafes at the Puget Sound locations in Washington, which covers the main Microsoft campus plus the local satellite locations. Some projects are on the horizon involving the recently acquired Nokia, regarding the important decisions of what to do with Nokia's buildings that Microsoft now owns. A big piece of the budget hinges on separating out Nokia assets and deciding what to do with them. It's a real estate decision and also a high-level business decision. Let's say they have a Nokia building in California. They may have one project to keep it going, another project to sell the building, another to demolish it. Microsoft will make the ultimate decision on which path to choose. CBRE runs the what-if analysis using Profix to provide Microsoft with all of the options for them to decide. If they renovate, here are the associated costs. If they demolish the building, and if they want to keep the employees, where can they now work? If the land is worth more than the building, the company can profit from it, but they may need to absorb people into the organization's infrastructure elsewhere. The strategy team from Microsoft would combine personnel data with the real estate data and recommendations that the finance team at CBRE provides. This strategy team is filled with finance people, but also real estate professionals, architects, etc. Most of CBRE's data-driven decision-making is based on capital expenditures and the recommendations they make about projects. With their forecast model, they can make people accountable for their decisions. These people are portfolio managers who oversee the sites, the finance people responsible in those regions, and the regional directors. Holding them accountable means CBRE is using CPM software to ensure that they don't overspend. It makes them more budget conscious and keeps them engaged. They see month-to-date, quarter-to-date, year-to-date, and year-over-year comparisons. They also look at percentages to date. Their goal is to show these above-mentioned comparisons using visualizations like dashboards and scorecards. Then, if they play around with forecast data, they can see the impact live on the dashboard. This ability to play with scenarios and see potential impacts is mainly intended for finance people, but also for the portfolio managers. The regional directors would just use streamlined reporting and visuals to view the results. At the end of the day, using CPM software helps to ensure that CBRE's finance team can make a serious impact, contributing to smarter, better decision-making at multiple levels, from the executives to the portfolio managers.
Thank you, Mark. Very insightful information. Always great to hear how companies are benefiting from using Profix. This now concludes the Profix Capital Expenditure Planning Coffee Talk. Thank you very much for your time today. To learn more about Profix's software and the product's full suite of capabilities, please register for a live, in-depth webinar, and also please visit the Profix Solutions Capital Expenditure Planning webpage for more details on this solution. Thanks again for your time today.